related to how banks are adopting to disruptive market environment, driven by the changing economic dynamics as well as rapidly changing technology landscape. Ladies and gentlemen, we first invite on stage Mr. Rashad Al Musafir, the acting CEO of the Oman Arab Bank. He has over 20 years of banking experience, holding various leadership positions, and is a certified public accountant. He holds a BA in Economics and Finance from the Boston University and has completed the Harvard Business School's General Management program. Let's welcome him on stage with a huge round of applause, everybody. Thank you very much for joining us. Our next distinguished panelist is Mr. Llyod Maddock, CEO of Ahli Bank. He is also the chairman of Al Hilal Mina Fund and the treasurer and board member of the Oman Banks Association. He has held various senior management roles in the banking sector in past and has a Bachelor of Mining Engineering from the University of Exeter, UK. Let's have a round of applause for Mr. Maddock. Our next panelist is Mr. Andrew Long, CEO, HSBC Bank, Oman. He is a career HSBC banker, having joined the company in 1977 in London, and has worked in a number of positions of the HSBC Group throughout Asia, New York, Australia, Middle East, and UK for over 4 decades. Let's give him a round of applause, everybody. Thank you. Our next panelist is Mr. Maqbool Al-Wahaibi, CEO of Oman Data Park. He has been a part of the executive management and founding team that established ODP, the first managed and cloud service provider in Oman. Prior to joining ODP, he's worked with the government of Oman for over 20 years on strategic national IT initiatives and projects, and holds a master's degree in computer software engineering from the University of York, a diploma in electrical and electronics engineering from the Bradford College in UK. Let's put our hands together and welcome Mr. Wahaibi. We'd also like to welcome on stage Mr. Iyad Al-Chammat, Country General Manager, Gulf Business Machines, Oman. He has 20 years of system integration, strategy, and operations experience in leading organizations, including Cisco and NCR Corporation, and is committed to excellence and ability to drive organizational success, and this has enabled him on multiple industry awards. Let's welcome Mr. Iyad Al-Chammat. We also would like to welcome on stage our panelists, come moderator, Mr. Ali Hassan Al-Moosa. Can we all give him a round of applause and welcome him on stage once again. Thank you very much, everybody, for joining us on the panel. We look forward to an engaging discussion. And on that note, I'm now going to hand it over to our moderator, Mr. Moosa.
Thank you very much for taking part in this panel of discussion. My first question is relating to the macroeconomic conditions, in specific to oil prices. The oil prices in the last 2 years have witnessed a dip. Recently, there has been signs of relief in terms of improved prices. And this causes a lot of disturbance in the macroeconomic environment. So my question is to the bankers, if I may. How do banks deal with such challenging macroeconomic environment?
So I've been in banking now for 40 years, much of which has been in the Far East, where Hong Kong in particular has been exposed to many cycles. So I've seen quite a few cycles, not that many oil cycles. And I think when an economy goes into crisis, the first thing the banks do is start wondering about whether they get repaid all the money they've lent out in the past. And so our credit systems get reviewed internally, our decisioning gets changed, and we become much more careful, if we're sensible, in whom we lend to. But we're also in this as a risk manager, and I think we can't close the doors, and we have to look forward, and we have to find opportunities in the future which will be strong. And some of those opportunities are going to be in new areas. And so we're talking today about digital and technology. And I think while we're being conservative in some of our existing business, we have to keep our minds open to opportunities as to where we can grow our businesses, because we can't shut down. So we have to be risk averse, but we can't be closed-minded, and we have to look, as I said again, for new customers, new opportunities, new sectors where there are going to be growth chances for us all.
Thank you, Andrew.
Thank you. I would also, like to highlight, banking business is all about risk management. Banks generate profits and run their businesses by appropriately balancing between the risks and rewards of various activities. It is not shying away, because we are actually sitting on a very sizable amount of customer deposits that need to be protected. And therefore, the banking business sits on a platform of risk management policies and procedures and systems. And with the changes and volatility that you see in the world economies, it makes it that much more important for you to develop sophisticated technological solutions that can give you up-to-date and accurate measurements of the various risks that you're taking. And hence, the more advanced, technologically advanced, and the more real-time information that you're able to get out of your technological systems to tell you where you should focus your efforts to balance your risks, then the more efficient you become and more resilient you can to overcome such volatilities in the market.
Thank you, Rashad. Llyod?
I would just add to that, good morning, that I think over the last 2 years, balance sheet management has been really key for the banks. The sector has benefited and relied quite heavily on the government and the pension funds for up to a third of the liabilities in the system. And that number is still around 5 billion riyals. So banks had to diversify their funding, and they had to manage the cost of funding, which was quite a challenge in many respects. And the reason for that, obviously, is to keep supporting the economy, which we work in. So, that was something that was required from the last 18 months right up to the present.
Okay. Thank you, Llyod. My next question is on a topic that Rashad mentioned, risk management. Banks in Oman and elsewhere work under regulations, specifically to do with risk management and compliance. What are the challenges banks face in terms of growth while managing risk and compliance? Any takers?
So it's always tricky to balance regulations, risk management, and profitability. They're trade-offs. The Omani economy has been managed by prudent regulations over many years. And generally, bankers and shareholders might echo some sadness that we're not able to earn the high returns that international banks can. But during difficult times when the economy has become volatile, most of the market players praise the prudent regulations of the regulators that cushion the economy from these shocks. So we have to be very careful that we have to have prudent regulations that protect the banking sector and try to maneuver within these regulations in order to become to generate the shareholder returns. And that takes strength in growing your business in terms of product innovation, in terms of improvement in your services and your delivery channels.
Right. Thank you.
Yes, I would just add to that, like Andrew, I've worked in a number of countries, and the dialogue with the regulator is an important aspect of that. We've all moved on to a new accounting standard this year, IFRS 9, and with it, it's brought forth some new financial regulatory ratios. What's been positive is that we have a regulatory body. We also have a representative body from the banking society called the Oman Banks Association. We've had very good dialogue with the regulator on a number of issues, and the regulator has taken some measures to remove overlapping regulation as far as the new accounting standards go, and that's had a very positive impact on the bank's ability to manage their liquidity.
I just want an example for you. I don't know how many of you watched a bunch of schoolboys aged 10 years old playing football, but if they play football without a referee, the game is chaotic and noisy, and you end up with tears and all sorts of things happening. Unfortunately, if you want a decent game, you have to have a referee. And in banking, if you want a decent banking sector, you have to have a referee. And the Central Bank of Oman is the 7th or 8th central bank that I've had to work with in my career. And every one of us as bankers in every country would like an element of relaxation in regulation to allow us the flexibility to do things that we want to do. But unfortunately, banks aren't always sensible, and we sometimes make mistakes. And having a regulator to control that, it gives us useful guidance. But at the end of the day, it's a competitive marketplace, and we have to find our own position in that marketplace, how we manage our balance sheet, our investment, or how our risk appetite is created in order to position ourselves to support the economies where we're growing, because banks only ever do as well as the economies in which we operate in. And if the economy fails, then the banks will fail.
Thank you. My next question is on technology. And we do have technology experts, but the question is open to all the members of the panel of discussion. In terms of technological advances, we have now, we talk about blockchain, we talk about artificial intelligence, and so many new advances. How do banks utilize and this how do the banks use this opportunity of new advances to deliver better customer services and products?
Thank you. I'm not a banker, so I am an intruder to the banking sector in a way. No, we are actually supporting the banking sector for the last 5 years in terms of hosting and managing their environment. I hope we are doing a good job there. Going back to your question, basically, as you rightly stated, technologies are there in order to fill in the gap in one way or another. But there is another aspect to it also. It's more towards actually reducing the operational kind of cost to the banking sector in a way, improving quality of service, and being able to have more reachability to your client and customers in the best way possible. And believe it or not, there is also another important aspect which tends to be very much ignored. It's more towards risk management. Technologies are making our transactions more secure. It's not what we think that technologies are actually opening doors to hackers. We are very much more vulnerable to intruders. Being a technology person, I tend to actually defend that statement, and I think according to Gartner, 2017 published statistics, banks tends to be more safer with technologies because you have more, it depends on how you actually do it. You have to do it in the right way possible. Going back to the blockchain and artificial intelligence, I think blockchain is there. It is moving forward, and it has to be implemented again with wise vision in order to make the best use of it. Technologies are there. If we don't make the best use of it in the best way possible, it's not going to serve us. It's not going to do a good job for us. It's actually going to complicate our life even more. We need to collaborate. It's time of, I tend to be in the middle here, but I think banking sector in particular need to be very much in collaboration with each other in order to implement these technologies like blockchain. Blockchain does not actually make any sense if I'm going to implement it in an island mode, if you like. It has to be interconnected between banks and financial institutes in order for us to make the best use of it. And there has to be a middle platform that can actually act as a middle layer in order to minimize the expenditure over such technologies. It makes no sense for us actually to deploy it in an island mode where every single entity has to actually push a lot of cash and implement their own machines. At the end of the day, all those machines are similar to each other. If you actually implement it once, and you provide it as a service to the banking sector in a way, and to your customers in the other side. I think that's the one of the best models that is existing today worldwide, and I think there are some banks today, there are some good case studies happening around the world in Singapore and other areas where banks have actually started having this centralized kind of blockchaining and fintech solutions in general.
Can I give you some statistics which might be quite interesting? In 2016, 16% of the ATMs in Sweden were closed. In the 2 years prior to the introduction of Prime Minister Modi's demonetization in India, there was a 532% increase in electronic payments. 20% of voice searches, 20% of searches in America today are by voice, and 16% of searches are unique. That means that there's been no other person has ever asked that question. All these are statistics that are pointing to an increasing awareness and desire of the population to use technology in how they go about their daily lives. And your comment, Ali, about your 10-year-old daughter is absolutely right. People don't want to use the old way of doing stuff. They want voice. And I think we as banks have to recognize that, particularly in the area of voice, where people are used to asking questions of technology for usually robots at the end of a telephone line. They don't always realize that. Google Home has sold one Google Home every second since October last year when they launched it. People want to speak to machines. They want to get answers. And the danger for banks is that those machines are giving the answers. And if your data is not on that machine, you won't get a sale. You won't get a transaction. And I think banks need to wake up to that fact. And this is not new. I remember in 2000 I was running then the cash management business for HSBC in Asia Pacific, and we were trying to work out what did e-commerce mean for cash management. These days, everybody talks about e-commerce. And we had a meeting with a young Chinese startup company, and they came to us and they said, would you be interested in investing in us? And we had a discussion about it, and we talked about it, and I went to my boss, and we decided not to. This Chinese startup company was a young company called Alibaba. So this is 18 years ago. We were having discussions with tech startup companies, and the landscape has changed. We're now talking to other tech startup companies in different areas. So we as banks have been always behind the curve in this story, but we are catching up. And those of us who spend a lot of money, and HSBC spends billions of dollars a year on technology, not all of it to good value, but we spend a lot. As we begin to realize and create these solutions, we identify the needs, then you start to deliver something that people actually want, then starting to deliver, as we have in the past, what we think they want. So being flexible and understanding needs and understanding changing dynamics, that's where banks have to be, and we haven't been good at it in the past.
Thank you. This gives me a good point to, as a system integrator, is the way we fill the gap between challenger like fintech and incumbent by providing solutions like you mentioned about the commerce, so the customer whenever or wherever they can do access to their systems. Especially with the commerce solution and omni solution from that perspective also today is not about the next generation of the web. It's about how the web can help to provide better quality of revenue from that perspective. And most importantly is about the bank has a lot of data today. What they're doing with this data, especially when it comes to the data warehousing and the business intelligence on top of that. So there's a long way to go from that perspective. I mean, as a system integrator is, to echo also what Maqbool has said, is our job to fill that gap.
But all these new technologies, how do actually be used to provide better value proposition to customers? I wanted to touch upon that point, that, okay, technologies can make things faster and cheaper in terms of operational efficiency, but what's the value proposition? What's the delivery to the end user in terms of what value do these technologies bring in?
I think today's generation are expecting banking products and services, and more than banking products and services, at their fingertips without actually having to walk into a branch or have a long-winded discussion with a customer service representative. They're so used to sitting and being on the phone, and you see this new generation on Snapchat and on Facebook and on Instagram and liking different pages, at a very young age, they don't understand or they don't appreciate the physical person-to-person banking relations that's been there for many years. And hence, technology for them is a value because it gives them the same products and services, but at much faster real-time delivery and available at their fingertips wherever they go, available 24 hours. I disagree with you that they're not real-time 24 hours. Many of the services are actually moving into real-time 24 hours. Perhaps not everything, but today many of the services are actually moving into real-time 24 hours. In the past, if you would like to make a transfer, you had to actually drive your car through traffic into the branch, sit inside the branch, fill up the forms, and do the transfer. Today, sitting wherever you are on the mobile app, and you can make the transfer immediate, which will execute even during a weekend, even if it's bank-to-bank locally. Overseas, perhaps it will take longer for that to happen. But these are the technologies that are making banking more, or creating the value proposition for the customer.
Right. Thank you.
Here in Oman, again with the support of the regulator, we've launched mobile wallets. I think each bank probably now has its own offering. And the slide that Ali put up earlier with a cell phone was really key, I think. If we follow on the Jack Ma story, basically, Jack Ma realized that Alipay was going to be a significant force in China. And he had two foreign owners, Temasek was one and Yahoo was another. So we split Alipay out of Alibaba and built it up. And he now controls something like 90% of the cellular payment market with Tencent, the two rivals. But what Jack Ma did was he offered customers the opportunity to transfer their account balances onto the platform, and he would pay interest on that, up to 7%. Within a matter of 2 years, this became the world's largest money market fund. They're doing now a fundraising which will be in the order of about $9 billion. And this values Alipay, or Ant Financial as it has evolved into, more than Goldman Sachs. So I think for us and the rest of the world, that's quite a interesting example of how things can evolve. When, however, Jack Ma tried to buy a similar platform in the US called MoneyGram, the regulators prevented him from doing that. So a large part of this also relies on regulation and what stance the regulator will take, not just to cellular payments, but to fintech more broadly.
Thank you. You've mentioned fintech. My next question is on that. Fintech is attacking banks in terms of providing certain services, especially with payments and money transfers. Banks are fighting back. Should they do that, or should they work and collaborate with fintech companies?
Both, I think, is the answer. To give you an example, competition and collaboration are not mutually exclusive. So when I ran HSBC's transaction bank, my biggest customer was my biggest competitor, which is slightly counterintuitive. And I think what we find is that at one stage, and I'm not sure we should be proud of it, but HSBC employed more programmers than Microsoft. But we realized that those programmers had a particular type of mindset. And over the last few years, we've created HSBC Digital Solutions, and we have several hundred people working in that now. And we are working in partnership with fintech firms to bring their nimbleness, their knowledge of the latest tech, the new ideas into the more conservative staid world of banking. And I think when you work in partnership like that, and we're working on trade finance projects, we're working on treasury projects, we're working on particularly custody, securities custody projects where blockchain is ideally suited to speed processing and bring down the cost of transactions. In partnership, that works. We also have to recognize in banking that there are many competing with us. So we have not just the fintech firms, but Amazon is now looking to create a bank effectively in the United States, and it will go global on the back of what the same sort of ideas that Alibaba did with Ant and Financial. So partnership and competition can go hand in hand and will continue to go hand in hand, I think, going forward.
Thank you.
Just like to comment, add to what you are saying. Actually, fintech solutions are available, Many of them are there in the market. Deploying fintech solution for the sake of nice to have does not make any sense. As I said, it has to be very much implemented wisely. And this takes us a little bit one step back towards sharpening our governance in the banking sector. And I think the banking sector today are very much asked to revisit their governance structure, especially in their IT departments and their CIO kind of divisions. I think CIOs today has to be very much towards being chief digital than chief information. And this has a significant shift because the chief digital officer, or used to be chief information officer, has to be very much engaged with the business. He cannot work alone, and he cannot have his own KPIs away from the business of the actual entity in the banking sector. So he should be very much engaged, and his KPIs should be business-driven, not technology-driven. Because the more he understands the business, the more he understands his customers' needs, the more he understands the problems, the more he actually can translate that into deploying the best fintech solution possible, and where things can actually be driven towards an enhancement mode rather than focusing onward, dealing with all the operational aspects. It should be a driver toward.
I believe banks should actually collaborate with fintechs in order to have a faster pace of introduction of banking or non-banking payment solutions. Oman Arab Bank has recently tied up, which was announced in the press, an arrangement with Thawani Pay, which is the first fintech providing payment solution, non-banking fintech providing payment solution for banks. And although it was a startup, a venture owned by an Omani gentleman, with a solution developed independently, it creates value for Oman Arab Bank, even though it competes partially with our own wallet, but it creates value because we are supporting the development and the creation of new technologies that are coming out. And fintech today, despite whether there's this solution itself is going to become a casting success across the country, or it's going to be a marginal success. It is a step forward toward developing more and more of these technologies. And I think that's important because today Oman is heading towards trying to lead in the technology sector and the banking technologies as well.
Right, thank you. My next topic is, or question is on cryptocurrencies. Cryptocurrencies, as we know, them through Bitcoin, but there are many other cryptocurrencies. There are actually 1,565 cryptocurrencies, and the number is growing. Other than Bitcoin, which is currently traded as around $9,403 US per Bitcoin. There is Litecoin, there is Ripple, there is Ethereum. What's the view on cryptocurrencies? Should they be a currency, as the name refers, or should they be an asset class? Any takers?
Just coming back to the statistic in Sweden, the central bank that's leading this discussion around the world is in Sweden, the Riksbank. And the reason they're leading the discussion is because across Scandinavia there's a significant decline in the use of cash. And I mentioned the statistic about the ATM decline in 2016. And the Central Bank of Sweden has decided that we need to look more carefully at the use of cryptocurrencies. And there are various reasons why they do this. The first reason is that it's generally accepted that an introduction of a central bank-backed digital currency will add permanently 3% to GDP. Now, whether it's 2 or 5, it doesn't really matter, but it will add to GDP. But then you get into questions about why would you want to do that? And there are transaction costs and systemic risks for having the payment systems as they are today, which the central banks typically don't like. So with payment processing at the moment, you're always going through an intermediary who will take a cut of the transaction at some stage. And that cut might be very tiny. But if you're handling billions of transactions at a time, that cut becomes significant. There's also a risk of delay. There's also a risk of systemic failure with these intermediaries. And if you introduce a cryptocurrency that's backed by the central bank rather than as an asset class issued by somebody without any trust, which doesn't carry the trust of the community, something like Bitcoin, then you have all sorts of particular problems you worry about. So there's a lot of work going on in Sweden, in Denmark, in Singapore, in China, and other countries where the central banks are considering this issue of a one-to-one swap between cash and cryptocurrencies issued by the central bank, and where there is no intermediary, where the transaction costs are coming down, and where you therefore get a much more fluid use of the effectively what is money in the future. But it's not problem-free, and I suspect His Excellency and his team are looking quite hard at this, as they are in many other central banks around the world. But I certainly don't believe it should be an asset class, and I wouldn't buy it myself. So if you are, then please don't.
So it's an interesting fact that if we talk about Bitcoin, the amount of Bitcoins that will ever be circulated is being capped. And it's at 21 million coins or tokens, and 17 million are already in circulation. So that basically means that only 20% of the available pool is available for the future. I was reading commentary from one gentleman the other day, and he was suggesting that the value of Bitcoin could go up to hundreds of thousands of dollars within the next 4 years because of this. But I tend to agree with Andrew's sentiment. I don't think I would buy it as an asset class. I think also what's interesting is around the world there have been some different stances taken. In India, I was reading recently that the regulator has banned regulated financial institutions in dealing in cryptocurrencies, possibly as a way to stop funds being taken out of the country. And recently, China closed down cryptocurrency exchanges. Whereas a bit closer to home, Dubai, perhaps not surprisingly, has stated on the sort of distributed ledger technology, the Bitcoin technology, that it aims to be a Bitcoin city within the next 4 years and have absolutely paperless government.
Just one other problem about that. Bitcoins, the most you can process in 1 second are four transactions a second. VisaNet, just as one example for credit cards, can process 56,000 transactions a second. Then when you get into SWIFT and the big electronic payment systems, they're faster than that. So until you can manage the processing speed requirements of processing volume, something like Bitcoin will never become a daily medium of exchange. It might become an asset, as you talked about, as an investment opportunity, but it will never be a transactional unit of any value.
Thank you. Very interesting insight. My last question to the panel is opportunities. What opportunities do you see in the economy and growth in Oman today? Banking, technology, opportunities.
I wouldn't comment on the banking. I'm thinking we have bankers here, so they will have to comment on that side. And from a technology perspective, especially when it comes to the collaboration part of between the technologies and the banking sector, I think in Oman in particular, we, with the blessing of the Central Bank of Oman, being very much active in the legislative aspect and trying to actually lay the ground to a faster deployment of technologies in the banking sector. I think we're doing a great job. One of the great examples that have been given by Rashad a minute ago was the fact that we are seeing some entrepreneurs who are actually started coming up with these fintech solutions. One of the interesting one was Thawani. Thawani, by the way, is hosted in Oman Dara Park, and now they've signed with Oman Arab Bank. And it was a gentleman, it was an entrepreneur who actually, and that particular entrepreneur wouldn't been in a position to actually kickstart his project and reach to this state without the support of the legislative component. And I think with that, there will be others on the way. I think we're going to see a lot of these fintech and e-wallet coming up in Oman, and the ground is there. We just have to, again, look forward for the industrial revolution of 4.0 related to the banking sector, and I think the banking sector has to be very much ready for this revolution and try to make the best use of it. We in Oman have today, between service providers, between cloud providers like Oman Data Park, between system integrators here, who are very much focused with the banking sector. I think those with the banking sector and the legislative departments in Oman can actually reach to a very fast deployment and adhere to the Industrial Revolution of 4.0. And I think the association is very much engaged in that particular aspect, driving this forward.
Thank you.
I would like to add here, again, the future is open and vast, because today in Oman, we don't see an extensive use of the existing technologies that we are aware of, be it big data analytics, blockchains, artificial intelligence, robotics, and you can keep on. These are all opportunities that we have available that we know of. But knowing how technology evolves over time and how technology develops, we really don't know what's going to be new in the next 6 months or next 12 months. So the faster you develop and adopt and adapt to the technologies, the closer you, or the more agile you are and more stronger your ability is to adapt to the new technologies. So I think the banking facade is going to change significantly going down this path, maybe 12 months, 24 months.
I think it comes down to two aspects. There is the front of office innovation, which we've discussed a little bit, particularly in terms of mobile banking. And there is also the back office side, where we're constantly looking to optimize cost to be more efficient. I've personally been reading a lot about the cloud over the last few weeks, and it's clear to me that we can't simply pick up and post our existing core banking systems into the cloud. I was reading a case study about Netflix, which is one of the larger companies that's fully embraced the cloud, and it was a process of years that took them to get there. So I think for us the cloud is something to consider, but I certainly wouldn't place myself in any sort of expert category, but perhaps that's something to look forward in the future as well.
Yeah, again, HSBC is using the cloud quite extensively globally now, but just on artificial intelligence, that's actually both an opportunity and a risk. The risk is in jobs, because offshore we have a lot of group service centers where using artificial intelligence now running in parallel with some of our human interfaces, and this time next year those humans will not be working in those jobs, artificial intelligence will be doing the work. And that is the risk for this economy and every economy, that AI and robotics takes the space of certain jobs that are quite repetitive now. You know, I think we used to think about robots being in the auto industry and that was it, but actually it's coming now into the services industry as well. But the opportunity lies in how do you get small companies and large companies to develop new services which are able to take the benefits from AI and the benefits of robotics and create new services that customers actually want. Things that we previously might not have looked at because it might have been too costly, today might become economic. So I think our product people in the banks need to be thinking about that sort of thing. But stepping back and looking at the more macro view, are there opportunities in Oman? Of course there are. And I think I have a lot of experience from Asia where I've seen the 10-feed type example working extremely well in Malaysia, for example. And I sit here with hope that 10-feed, which has been working in the background for the last 15 or 18 months, is going to deliver the opportunities for investment and employment and growth that this country needs as it looks to diversify away from oil. And I'm very hopeful that those opportunities will come through. I hear very good stories about Tanfeed. I just don't hear enough good news coming publicly about it. But behind the scenes, I hear there's a lot going on. So that is where I think the opportunity for this economy lies. We don't believe the oil price is going to go above 65, 70 for the next 2 or 3 years as a research institution. But we do see other areas where there's going to be growth, and we as a bank want to be part of that and carry on the first 70 years that we've been in this country to another 70 years of growth. And I think there's great hope for the future.
Have a last comment on the cloud aspect that you've mentioned. Being a cloud service provider in Oman, I think in Oman we have an extraordinary example of how how actually the banking sector can make use of cloud services, and how can they cloudify as much services and technologies they have. Being a local cloud service provider, I think we are very much adhering to the to the legal or basically the legislative aspect of having the importance of having all of our data localized within the country itself, and making use of the cloud services. And that is the public cloud we are offering today from within the country. So with the cloud infrastructure that Oman Data Park has today, you can actually make use of cloudifying as much as possible of your technologies and minimizing your cost, obviously, and maximizing your quality of service, and adhering to the legislative aspect of having your data localized. And I think there are some components that the banking sector today are in need of pushing to the cloud, especially things like testing environment. It makes no sense for a bank actually to deploy and to invest in forming a testing environment that they use in couple of weeks in a year time. And that asset, goes into a depreciation mode. That asset actually tend to be a burden from a cost perspective. Now, to lower that, you actually can deploy those testing environment in a pay-per-use aspect. And this is the beauty of cloud. I mean, it's a metered approach. And as I said, unlike other countries that we have in the region, Oman Data Park does have an option today of cloudifying banking solutions and adhering to the legislative aspect of having the data localized in Oman.
Thank you. Let's open the floor to questions. Any questions from the audience? Please feel free. The panelists are still available. Any questions?
My name is Abdullah. I'm from the Capital Market Authority. My question relates to technology, basically. As we enter the new age of fintech, and all of these disruption in technologies, I got a feeling that we're becoming more vulnerable to, let's say, dangers on the cyber world. So, in your opinion, what is your expectation for the future as we enter and as we dive deeper and deeper into the world of new technologies? Are we really becoming more vulnerable? And is there any effort, equal effort, as we innovate in technology, is there any innovation on the other side to face, the threats that will result from these, innovation in technology? I'd appreciate your views on this.
Thank you. Andrew?
So the answer is we are under threat. In fact, we as a group see cybersecurity as the #1 risk for our bank globally. #1 risk. Central Bank of Bangladesh last year or the year before lost a lot of money because it came under attack. And as a result of that, SWIFT is pushing out various technological solutions to protect central banks and other banks. We as a group get attacked daily for denial of service attacks, phishing attacks, all sorts of spear attacks, you name it. We're constantly being attacked. And the problem we have is the criminals have a lot of money to spend, and they're very focused. And the other problem we have is that from much of the research we do around the attacks we come under, some of the attacks are state-sponsored. And it's very hard for a commercial organization to protect itself against a state-sponsored type of attack. So there are significant risks for all institutions, not just banks, but all institutions from coming under cybersecurity, and therefore you need to spend a lot of money and use a lot of intellectual brain power to try and find ways of defending yourselves in the future. But you can't worry about attack all the time. You have to think about your own business. You can't live your life in fear. So provided you have enough sufficient focus on defense and recovery from attack, you can still focus more of your time actually on building your business and servicing your customers. So it's not something to be paranoid about, but it is absolutely something to be aware about.
I just like to add one of the important factors in the risks involved in the technologies are the awareness of the population on these technologies. One of the biggest issues that banks face is the customers, for example, sharing passwords, sharing customer-related information to people that are not authorized, people who are pretending to be part of banks. As banks, when you invest in technologies, you put in as much protection covers and firewalls and securities as possible to protect others from penetrating directly into the banking interface. But there is only so much you can do in preventing customers themselves opening up themselves to these risks. And I think a very important factor in all of this is the efforts that the banks take into spreading awareness to the public on what they need to do to protect their information and to protect their accounts against such attacks.
Well, I think Rashad makes a very interesting point there, because two-factor authentication, or whatever you want to call it, is one way of defending yourself. But if people decide to share their ideas, their passwords, whatever, then you have a problem. And that is why biometrics is becoming so useful. So we are seeing in the world being developed facial recognition, voice recognition, touch recognition, all of which are unique to a user, and I can't share my face with somebody else to get access to a system. Only I can access the system. And I think that's why there's some really good things happening in technology which allow us to increase the security of the systems that we operate.
This actually takes us to the analogy of choosing between the option of driving and taking the risk or staying at home. And I do agree with the statement that yes, we are vulnerable. We are in a threat mode, and that's what makes us even more stronger as security chief security officers within the organizations. And I think one of the components that Oman has to start thinking seriously of deploying today is the threat intelligence platform, which can serve the whole across the banking sector in Oman. And that is something I wouldn't encourage every single bank to actually deploy, because of the, it doesn't actually make sense, even from a costing perspective. And that is one of the components that we have to actually collaborate together with maybe with the association and the banking sector in order to identify a middle man who can actually take over the operational aspect of this single threat intelligence system that we actually need to deploy in order to mitigate some of the risks that you've mentioned.
Thank you. We have a question, Nahla.
Assalamu alaikum. Nahla Blushi, Central Bank of Oman. My question is, do you think that introducing central bank digital currency would help in reducing the risk of trading with the other cryptocurrencies which are available in the market?
At the moment, you have cash, and you can buy any asset you want, which might be a cryptocurrency. If you have a cryptocurrency, it won't replace cash. It might be an alternative to cash. So you can still buy dangerous assets, difficult assets, risky assets. So I think if a central bank wants to introduce a cryptocurrency, it wouldn't be to stop them using that currency for particular things. The advantage for a central bank to introduce cryptocurrency is that it then sees the data around that currency. So it can control money laundering, it can control terrorist financing, it can better see who's avoiding tax because they've got payment flows. So there's some very significant benefits for it. But I don't think a central bank introduced digital currency is a rationale for introducing it would be to stop people buying the wrong products, whether it's a cryptocurrency or something else.
Okay, with that, I would like to thank our panelists, Andrew Long, HSBC, Maqbool Wahaibi from Oman Data Park, Mr. Rashad Musafir from Oman Arab Bank, Iyad, Chammat, GBM, and Llyod Maddock from Ahli Bank. Thank you very much.